And so I think what replaces the dollar is not something that looks like the dollar, not like, China currency, enters an 80-year period of being the global reserve currency to the same degree. It's not like that. It's two things. It's one, neutral reserve assets becoming more relevant. So gold's the big incumbent. Obviously, we're both bullish on Bitcoin. Bitcoin is a really powerful one because it's not only a reserve asset, it's also a settlement network. Neutral reserve assets becoming more relevant. So gold's the big incumbent. Obviously, we're both bullish on Bitcoin. Bitcoin is a really powerful one because it's not only a reserve asset, it's also a settlement network. And so I think and I've been writing about this literally since 2020, is that we enter a more multipolar world. So not a single fiat currency replacing us, but more gold, more Bitcoin, more bilateral non-dollar systems.
A quiet but irreversible shift is reshaping the foundation of the global monetary system. An investment strategist, Lyn Alden, explains that neutral reserve assets are reasserting themselves after decades of decline, with gold leading the way. Central banks steadily reduced their gold holdings from the post-World War II era until around 2000, causing its share of global reserves to fall dramatically. But over the past 20 years, both rising gold prices and renewed central bank accumulation have reversed that trend. With Treasuries delivering some of their worst inflation-adjusted performance in modern history, gold is once again approaching the position of the top global reserve asset. Bitcoin, she adds, strengthens this shift by serving not only as a reserve instrument but also as a native settlement network. Lyn Alden notes that the world is not moving toward a new single hegemonic currency replacing the dollar. Instead, global trade is gradually decentralizing as countries increasingly use their own currencies for bilateral agreements, such as China settling imports from Brazil or Russia in yuan, or regional partners like India and Russia establishing their own frameworks. Meanwhile, several smaller nations are experimenting with Bitcoin-based systems. This creates a multipolar environment where gold, Bitcoin, and non-dollar trade arrangements gain importance while the dollar remains significant but no longer unrivaled. According to Lyn Alden, the U.S. has historically benefited unevenly from dollar dominance, with financial centers and government institutions gaining the most while the industrial heartland weakened. She argues that although U.S. policymakers will naturally try to maintain the current system, this dominance has come with structural costs that accumulated over decades. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
So neutral reserve assets are what are kind of reasserting themselves. So gold had a multi-decade trend from like World War II up until around 2000 of a declining share of central bank reserve assets. It got down to like 10, it went from like 80% to like 10% for decades. And for the past 20 plus years, it's actually been steadily increasing. So the big part of that's price appreciation. So gold was a few hundred an ounce in like 2000. Now it's almost 4,000 an ounce. So part of it's price appreciation. And also central banks were reducing their tonnage into around 2009, and they started increasing their tonnage. So the combination of central banks reaccumulating gold and being rewarded with higher gold prices as U.S. bonds have like their worst performance in modern history means that if anything, gold is actually on the verge of flipping treasuries as the number one reserve asset. And so I think what replaces the dollar is not something that looks like the dollar, not like, China currency, enters an 80-year period of being the global reserve currency to the same degree. It's not like that. It's two things. It's one, neutral reserve assets becoming more relevant. So gold's the big incumbent. Obviously, we're both bullish on Bitcoin. Bitcoin is a really powerful one because it's not only a reserve asset, it's also a settlement network. So some of the smaller ones are dabbling in that, El Salvador, Kingdom of Bhutan, some others. Um, and then two, more bilateral trade agreements. So not necessarily this is like some BRICS currency per se, but that China buys agricultural products from Brazil in Chinese currency, or China buys Russian energy in Chinese currency. So China is kind of a big hub, but not to the same degree. It's more like with their own trading partners. And then to some extent, India and Russia have their agreements, and India and Brazil have their agreements, and kind of a collection of not necessarily friends, but mutually aligned partners have more of their own kind of non-dollar trading situation. And so I think and I've been writing about this literally since 2020, is that we enter a more multipolar world. So not a single fiat currency replacing us, but more gold, more Bitcoin, more bilateral non-dollar systems. And the dollar still might be the biggest for a long time, but instead of being like the only game in town, it's like one of the big games in town. Maybe still the single biggest, but it's a plurality rather than dominant. Gold's the big incumbent. Obviously, we're both bullish on Bitcoin. Bitcoin is a really powerful one because it's not only a reserve asset, it's also a settlement network. So some of the smaller ones are dabbling in that, El Salvador, Kingdom of Bhutan, some others. Um, and then two, more bilateral trade agreements. So not necessarily there's like some BRICS currency per se, but that, China buys agricultural products from Brazil in Chinese currency, or China buys Russian energy in Chinese currency. So China is kind of a big hub, but not to the same degree. It's more like with their own trading partners. And then to some extent, India and Russia have their agreements, and India and Brazil have their agreements, and kind of a collection of not necessarily friends, but mutually aligned partners have more of their own kind of non-dollar trading situation. And so I think and I've been writing about this literally since 2020, is that we enter a more multipolar world. So not a single fiat currency replacing us, but more gold, more Bitcoin, more bilateral non-dollar systems. And the dollar still might be the biggest for a long time, but instead of being like the only game in town, it's like one of the big games in town. Maybe still the single biggest, but it's a plurality rather than dominant. I do, and some of them have outright said it. Like, the Treasury, the Secretary of Treasury has outright said that. I think it's natural. I mean, almost every empire in history tries to stay an empire. And this is where sometimes I get the question, is the dollar being the global reserve currency good for America? And the problem is that with 340 million people and different sectors and government versus private, there's no single America. So the question is, who in America is it good for or bad for? Historically, being the global reserve currencies, it's good for those issuing dollars and dollar-denominated securities. So if you're the government, it's historically been good for you. If you're New York and you're issuing all these securities that the world is kind of, we're hollowing out our industrial base, so we're selling all of our assets in Detroit to China. China's running a surplus, and then they reinvest back in America, but they invest in New York issued securities or silicon-based private equity, right? So we're hollowing out our heartland, propping up our coasts essentially, and we're propping up our defense industrial complex and government complex. That's kind of who benefits. And so those that are running things generally want to prolong as much as possible. They want to fight for everything they have, even though that imbalance is itself what hollows out the industrial base. Um, and so losing the reserve currency status, or at least losing like the dominant reserve currency status, is not a bad thing if it's handled well, because it was an anomaly to begin with, and it came from drawbacks which accumulated and hurt us. So when people ask me, what can you do? It's, well, you can acknowledge the inevitability of the situation and adapt from a period of strength.
The US dollar's reserve currency position, as Lyn Alden describes, is not in immediate danger but is structurally insecure over the long term. Unlike most national currencies that can collapse quickly when foreign holders sell them, the dollar benefits from enormous inelastic demand built into the global financial system. With roughly $18 trillion in dollar-denominated debt held outside the United States, much of it owed between non-US entities, the dollar sits at the center of a massive euro-dollar network. This web of loans, securities, and derivatives creates a powerful lock-in effect, where defaulting becomes a global standoff and switching to a new standard is slow and difficult. Lyn Alden also notes that no single country today has the post-World War II conditions that allowed the United States to dominate more than 40% of global GDP, the world's largest gold reserves, and a fully intact industrial base. Now, with the U.S. reduced to 15 to 25% of global GDP and with manufacturing leadership shifting to China, the foundational metrics behind dollar supremacy are gradually weakening. Yet the dollar persists because reserve status lags the decline of underlying national strength, much like a social network that remains widely used long after it stops being culturally dominant. The forces eroding dollar hegemony are real but slow, setting the stage not for a collapse but for a multi-decade transition toward a more multipolar currency environment. Let's get back to the interview.
And so I would describe it as moderately insecure. The reserve currency status is moderately insecure, which is it's kind of like more like it's inevitably insecure, but it's not immediately insecure. So you kind of break that into time versus likelihood. So high likelihood of being insecure, but I think takes a while. Couple ways to measure it. One is that unlike most currencies, so like Egyptian pounds, no one outside of Egypt really needs Egyptian pounds. So for whatever reason, if they don't want Egyptian pounds anymore, they all tomorrow they could just sell them, and Egypt could go into a currency crisis. Especially if they don't have the reserves. For a little while they could use their own reserves to prop it up, but then if they run out of those, the currency could just collapse. And that's true for really any most countries in the world, other than maybe the top handful. Now the U.S. In addition to optional holding of dollars and dollar-denominated assets, which could change if the perception changes, we also have inelastic demand for our currency as the global reserve currency. And one way to measure that is, like, for example, the Bank for International Settlements estimates that there's something like 18 trillion in dollar-denominated debt held outside of the U.S. that is mostly not even owed to the U.S. It's mostly owed, like an entity in Brazil will owe dollars to an entity in China. It's neither of their currencies, but it's this big euro dollar system. And it's this big interconnected web of securities and loans. Plus, that doesn't even count with certain derivatives. And all of that, if you have a debt in something, it's inflexible demand for that thing. Now you could default on it, but then if you're the first one to default, other creditors are like, well, we're not gonna finance that entity in Argentina anymore. We're not gonna finance that entity in Zimbabwe anymore. Obviously, big ones like China or Brazil are kind of like they're more buffered. They have so and then so creditors could potentially default, like, but then it's like, well, there a lot of entities will owe dollars, but then there also others owe them dollars. So the question is who defaults first? It's like a standoff. And that's a network effect that's very hard to break. It's not unbreakable, but it's very hard to break. And that is like a container ship that takes, like a very long time to turn around. Um, and so that's why this is inherently like a slow process. And to the BRICS question, I mean, the amount of dialogue and planning that BRICS has done versus their actions is
Right.
like the ratios. We're always here. We tweet every day about, like, oh, BRICS has done this, or BRICS has done this, or BRICS has done this, and it's like, well, what currency is still using the dollar? Okay, we'll check back in 5 years. Now, the when Russia invaded Ukraine and got sanctioned, that was an accelerator. So the parts of that do materialize is Russia and China, for example, increase their trade in their currencies way more. But then you have like a network effect problem, and this already came up. Like India and Russia do a lot of trade, but it's generally more one directional. So India will buy a lot of arms and commodities from Russia, and then Russia will get all these rupees, and then be like, well, what are we going to do with all these rupees? And the problem is, like, with dollars, we have a really big capital market. We're the biggest, deepest capital market in the world. This with the S&P 500, all of our corporate bond market, real estate, private equity, Silicon Valley. There's a lot of things you can do with dollars. And then, of course, because you can use dollars to also buy global commodities, it's a thing you just kind of stick in for a rainy day, at least historically. Whereas all these smaller ones, they have way shallower capital markets, usually way less diverse, often worse rule of law or capital freedom. So, like, how much money do you want to stick in China, knowing that you might not be able to get it out the same way historically you could with the United States. Um, and so it's been hard for them to build a network effect. And another way of mentioning is that after World War II, and this is why there's nothing that really replaces the dollar. After World War II, the United States has something like over 40% of global GDP, by far the most gold, the only, like, intact manufacturing base. We were the hyperpower, with only Soviet Union really a contender. And so we won by default. Now, over time, because of hollowing ourselves out, and because of other countries recovering, we've slipped down to 15 to 25% of global GDP, depending if you look at purchasing power parity or nominal. We, now we don't have the biggest manufacturing capability in the world. That's China. Multiple other metrics, our steel making, our energy production, it's all that's gone down. Uh, Ray Dalio has done good research on this, where certain metrics of a country are kind of leading and lagging. So education's leading. So the big, the world powers, and they have really good education, and then technology and things like that, and the economy, and then the reserve currency comes, and then there's earlier things start rolling over, but the reserve currency, because it has network effects, still lasts a long time. It's kind of like how if a social media network is not really cool anymore, it still lingers for a long time because the network effects are so strong. Same thing's true for reserve currency. So all the metrics that made it the reserve currency are on the downtrend, but that's another several decades.
The picture that emerges is of a global system shifting gradually rather than abruptly, held in place by powerful dollar-based network effects yet pushed forward by changing economic realities. Deep U.S. capital markets and widespread dollar-denominated debt still anchor the currency at the center of global finance, but the long-term forces that once made it unrivaled have been losing strength. As economic influence becomes more dispersed, more trade settles in local currencies, and neutral assets like gold and Bitcoin gain traction, the system moves toward a broader, multipolar structure. The dollar remains significant, but increasingly as one major pillar among several instead of the singular foundation it once was. How might rising adoption of non-dollar settlement systems such as gold-backed agreements or Bitcoin-based networks reshape global trade flows over the next decade? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support and we hope you enjoy the video.